Hey folks, Dan Frio here with your opening bell for August 15th, 2025. Now, what a week we had. We had CPI coming in, consumer inflation. We had producer inflation coming in. We had retail sales, initial jobless claims, and mortgage rates. You know how much they moved for the week? I think 0.01. So let's dive into the data that we're getting today, and then I'll be back at 2 o'clock to give you a recap of this week and what's in the forecast for next week. But let's look at the news that we got today. Right through here, here's what we're seeing. S&P and Dow Jones hit record high. Heads for the big weekly gains after, what's the news there? After solid retail sales data. So let's look at the retail sales data. It's really the only information we got out today. I'm going to take you right to the economic calendar. I had to dig really deep into the charting through here to figure out or get this data. So here's what I mean. When you go to Bloomberg calendar, if you're out there, you're a financial person or you follow this data like I do. When you go to the economic calendar here, it's kind of quirky to work with. But if you go through here, you can pick importance. If you pick one or three, the most important, you're not going to get anything. You got to click 2 and then you could hit apply, and this is what you're going to get. So on Friday, here's what we got today. Core retail sales, last reading was up 0.8. It was supposed to go up 0.3 and it came in right at point. Okay, it's up 0.3. So that's okay. Export prices, last reading 0.5, expected to go up 0.1. Went up 0.1. Export prices. So our prices of things going out, they're in line. Import prices. Look at this number. Last reading was -1. It was supposed to go up +1. It came in at +0.4. This isn't doing anything to the markets right now. I think the markets are absorbing this because let's just kind of look at some of the news that we have coming out this week and the progress we made. Let's put it that way. So here, I wrote down my notes. All the indices across the board, when you're looking at these things through here, they're all up 1%. That's why they all hit record highs, basically. Okay, so that's first thing. Retail sales, they came in a check. Okay, so that's another good news for the day. The PPI, when you really dig into the PPI, what is the PPI, you might be saying? Well, that's a number we got yesterday. This is producer inflation. Okay, look at this number. Last reading was 0. It was expected to go up 0.2, went up 0.9. But if you dig into this number like we did, we can't judge a book by its cover. This was mostly management fees of portfolios and a bigger jump than expected in services. So when the markets absorb this data, they're saying, oh, okay, it wasn't as inflationary across the board as we thought. Trump is meeting with Putin this weekend, and hopefully there's a resolution to the Russian-Ukraine war. That would be fantastic. So that would be more good news. And then let's go back to this. We also focus in on oil on my channel. Why? Well, hopefully as you watch me and you understand why we focus in on all these things above, oil is a big piece of the inflationary puzzle. Oil and housing. Okay, so if oil, remember about a year ago, even 8 months ago, this was about $75, $80 a barrel. That's a huge or a massive decline in oil prices. So this is going to help out on the inflationary front quite a bit. And then the housing rent equivalent, that is also coming down quite a bit. So you're going to see some deterioration in the inflationary numbers because of just those two components alone. So that's what we had through there. So let's get over to the bond market. That's why you're here, to figure out what's going on with mortgage rates. We don't focus in on the 10-year Treasury here, folks. We focus on the mortgage-backed security. So if you're new to my channel, here's what we focus in on. When you really want to know what's going on with mortgage rates, follow the mortgage bond. Because if you want to figure out what's going on with the 10-year rate, well, what do? You follow the 10-year. Well, why not follow the mortgage bond if you're trying to figure out mortgage rates? You can follow the 10-year Treasury. It kind of goes in the same direction if you don't have access to the mortgage bond. But to get this access to this, just tune in to me each day for about 5-10 minutes, and you're going to get all the news that you need. So here's what we're seeing in the markets right now. It's completely flat. That means basically mortgage rates aren't going to change at all. So this was up a little bit earlier. It was only up 2 or 3 ticks, and now it's back to par. So I'm thinking this number is basically benign. So it should be a flat day unless we get more and more news. We're not hearing anything from tariffs. We're not hearing anything from the wars and things like that because Trump is meeting this weekend. So a lot of the international news is kind of muted at this time too. So I think the markets are just going to hopefully be stabilized for a Friday afternoon. That'd be nice for us. So we went through the economic calendar. Let's get over the Fed stuff because you need to understand all these data points that we go over. Okay, when you talk about the Federal Reserve, they talk about the federal funds rate. Okay, the federal funds rate is the only interest rate the Federal Reserve basically controls. It kind of controls also the front end or short-term interest rates, like car loans, credit cards, and things like that. So that's why, as the Federal Reserve, you might be cheering for the Federal Reserve to cut rates, because if they do, well, your credit card payments or rates going to go down, and a lot of other, short-term maturity loans are going to go down, like car loans and things like that. So you might even want to cheer for this to go down as well. But the markets are saying, okay, Fed, we know inflation. Let's say inflation's at 3. Well, your federal funds rate should probably be at 3 as well. So there's about 1 to 1.5% that could come out of this, which would be fantastic news. That's what the market's hoping for and cheering for. They're waiting for Federal Reserve rate cuts to bring down the short end of the yield curve to help basically interest rates across the board. So what's the Federal Reserve going to do at the next meeting or the next few meetings? Well, we want to come back to this every day because this number is all over the map. Right after the Federal Reserve met last time, there was a 95% chance they weren't going to do anything with rates. Now what, after the jobs report and some of the other information we got, is 33 days until the Fed meets, but what are they going to do now? Well, if you scroll down to this is a CME FedWatch tool. It's going to give us a likelihood the Federal Reserve, what they're going to do at the next meeting or meetings. Go down through here, and here's the report, folks. So if you see through here, you can see the federal funds rate. There's a 92.5% chance that the federal funds rate is going to be at 4 to 4.25. Well, that means there's going to be a cut. How? Well, right through here. The federal funds rate right now is 4.25 to 4.5. So if you go back to here, you're going to see it's 4 to 4.25. So yeah, there is a cut. Now there's over a 50% cut that they're going to cut in October as well. So now the dilemma is, well, they're probably going to cut it September. How many more cuts are left? So that's what the market's trying to figure out, especially the equity markets, because as they know more and more cuts are coming, the equity markets are going to increase accordingly. So it's kind of a cycle. So you have to focus in on this, and then you can kind of focus in on where the other markets are going to take you. So that's that. So last but not least, I want to go to corporate earnings. And there are none today. And the reason why I wanted to point this out is I know people were always going to post down below saying, hey, Dan, you didn't post earnings today. So are they bad? No, folks, there are none today because I don't try to hide anything from you. Let's go back to yesterday. Okay, so let's go to yesterday. We had, 9 companies reported on earnings per share. 2 of those companies missed. The other ones hit, and one didn't come out. So that's earnings per share and revenue, kind of the same thing. So it's still looking like the majority of companies, probably 70 or 80%, are in the green when it comes to earnings per share and also revenue. But not a lot of earnings reports are coming out anymore. So that's why I'm not focusing in on that. So if you ask that question, that's why we do that. So last but not least, you might want to ask, Dan, who are you? Okay, so folks, just think of it this way. I could hopefully be your personal mortgage advisor. Why? Well, I'm licensed in all 50 states as well as Puerto Rico. And the reason why I'm licensed is I work at a federal, I'll rephrase it because somebody says, Dan, do you really work at a federal bank? Folks, I work at People's Bank and Trust. It is a federally licensed bank. So that gives me a federally license through all 50 states as well as Puerto Rico. Here's the unique thing about us. We're like a large brokerage. That's the best way I can explain it. We're set up with 33 other lenders, but I don't call ourselves a broker because we're actually a bank. So think of you're dealing with a federally licensed mortgage guy who's a broker with 33 lenders to compete for your business. If you have the ability to do that on your own, God bless you. But if you want to put those all those computers and documents away because you're like, okay, if I need a mortgage, so I need to get 4 quotes. Then I'm getting all these numbers back I really don't understand. Mortgage rates change daily or each day. I don't understand this. We'll put basically our service to work for you. So go to the rate update. Let me just walk you through it real quick. Up through here, you can give us a call. Either Alan or myself are going to be answering. We don't have a mega call center. It is Alan and me that answer the phone. If nobody answers, that means Alan and I are busy, or we'll get back with you as soon as I can. If you want to get me directly and you want to ask a specific question, just hit the Ask Dan button. That's what it's there for. You can upload your mortgage statement, ask me anything. I'll most likely email you back, text you back, or even send you a personalized video. Let's say you're looking to refinance and you're just like, Dan, when is the rate going to hit this? Well, check it out for yourself. We actually created this for you. If you're looking to refinance, click this refinance tab. It's not going to explain to you what a refinance is. It's going to help you set up a trigger to say, Dan, when rates hit X, give me a call. Let's kick those numbers around, see if the savings is enough for me. And so if it is, I'll go ahead and lock in and start the paperwork. And if it's not, let's just wait a little bit longer. So if you're looking to refinance, check that out. If you're looking to buy a home, you got to check this out. It's a grant for up to $7,000 that's forgivable. You don't have to pay it back. There's no lien on your property. Think, even when you go to refinance, you don't have this to worry about, because a lot of people that are using down payment assistance programs, when you go to, let's say you close at 7.5%, 8% rates, and then you go to refinance and you have a $10,000, $15,000, $20,000 down payment assistance program, well, now you know you got to include that in your payoff. So now you got to refinance that into your mortgage. Well, this one is basically free. It's basically you walk out of the closing, there's nothing attached. You never have to pay the loan back, even if you refinance. Last but not least, if you already got some quotes and you're saying, Dan, can you review this best quote, the best quote I got, and see if you can beat it? Well, let's try it. Go into my loan estimate review tab, click it. What you're going to do is upload the best loan estimate you have. And if we can beat them on fees and rate, I hope to win you as a customer. If we can't, the first thing I'm going to email you back is saying, God bless you. You did your due diligence. You did a fantastic job. Go ahead and sign the paperwork. Don't look back and go ahead and close. And congratulations on your new loan. But most of the time, what people are finding out is, hey, you can save you money on rates and fees. So, folks, that is it for this morning's report. But right now, mortgage rates, they're not going to move at all. The MBS is between 0 and +2. But if you got money in the stock market, you're making money in the Dow Jones. The other ones are basically flat on the day. So thanks for watching. I will be back today at 2 o'clock to give you a recap of the week and then what to expect next week when it comes to these things over through here. So thanks for watching, folks. I greatly appreciate it. And if you haven't subscribed yet, I'm trying to get to 40,000 subscribers as soon as I can. Only you guys can help me. So if you can subscribe down over there, I'd greatly appreciate it. Thanks for watching, and join me today at 2 o'clock to figure out what's going on next week. Take care, folks. See you then. Bye-bye.